morning, everyone, and welcome to the European crossover webinar. And bear with me. Sorry about that. I have everything already except for the turned on the webinar button. And we're all set right now, so bear with me. Just deleting something, not deleting, but closing out a window. Okie dokie. We see the cash dollar index here, and a little bit around imperial. Yesterday we had our resistance at 94.33, which is exactly where we're at. We closed just right. Actually, we closed right on it. In the analysis, I was saying we closed just above it, but we didn't. Which closing above it would actually open the door for us to move higher. Which I said, yeah, we closed hard, but we have not. But we saw quite the move yesterday. I mean, this thing just kind of like fell out of bed. And I'll go to the indices. You can see we're trying to bounce up a little bit, but boy, did yesterday just rolled over, and yesterday really took me by surprise in the sense that there wasn't anything definitive. We didn't hit a specific level at the time. We just kind of just started going lower and lower. If you look at it on a 5-minute chart, it was just like drip, 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 drip. There wasn't any kind of like, oh, if you break one level, we just shoof or rally back. That's in the NAS. You can see same similar move in S&Ps, and then obviously gold really took a header. Gold took a header in itself, and really is closer. I actually Pedro had asked about this yesterday, and it was kind of a good situation when we know we're already at. And I'm looking at this area between 1827 to 1844. With 1840 being the VWAP all the way from the March lows, if you look back here. And that's where I think we're heading, which is down here, right into this zone. Drop down here to 1840, probably overshoot a little bit down in here. But yeah, we saw quite the move yesterday. And we saw the dollar going out onto its gains. And we'll go back. Oh, someone's saying, what is VWAP? Then let's go back. I think we're still on this chart. Hang on a moment. There we are. We're still on it. So VWAP generally, like if you look on the blue line here, will be the volume weighted average price. And this, in this case, is from today's VWAP. So it starts when the market opened up at 5 p.m. Central Standard Time is when they open up again. And then I also have 2-day VWAP. And what that does is, and you'll see that happen, you'll see the market technically rotate around there. You can see how we kind of hold this VWAP and then we move higher, ends up working as support. And if we get below it, then that really opens the door for us to move lower. VWAP, like if you have, probably the simplest way I can say it is if you had 2 trades and one trade was at $50 and the other one was at $100, you'd say, well, the average price is $75. But what VWAP does is it measures the volume at each price. And so it gives you a better idea of where the real value is at. So I'll give you an example here. If you look at NASDAQ, this brown line was the VWAP from the June lows, okay? From the June lows and the volume at weighted average price. You can see that on the first down move here, just about caught the bottom right there. We rallied, same thing, held up here again. 3 times the same thing it held. And then when it broke through it, you can see that the market followed through on the downside. So when we're looking at VWAP, in this case, for gold, and you remember the March lows was significant for equities, for for metals. You can see that's when everything pretty much fell out of bed at the time. So I looked at the volume weighted average price from there, and that comes in down here around, actually comes in at 1840. So we're looking for, and you can see how it held it the last time. You see here, we had rallied at the March lows down here. What was it, 14 and change, and rallied up as high as what? I guess it's been running here right around 1800. And you can see that over time, the market paired back, and look where it ended up pulling back to. In the June lows, we had the VWAP here, and you can see we overshot a little bit, but you can see ultimately it held it, and then we ended up working higher. Now from the same June lows right here, you can see when the market fell back, look where it fell back to, exactly the June low VWAP. So looking for this market to break. I'm looking for, once again, somewhere between this 1827, 1844 area, and that's going to coincide with 1840, which is going to be the VWAP off of the March lows. And let's go on and move back into, we can go pull up the economic calendar. So we did get German iPhone numbers out, and those came in pretty much in line. So no changes here. Euro is at 1662. We've been as low as 1645. Later on today, we do get building permits in the States, along with the initial jobless claims, which is a weekly number. And then, of course, at 10 a.m. Eastern, we get new home sales. And then a low-tiered Fed manufacturing thing, which is going to be Kansas City. Fairly low on the totem pole. Not real low, but fairly low. Not as low as I think I would say the Richmond Index, but it's not a main tier piece of data. So once again, building permits at 8 a.m. Eastern, which is a little bit early. Then 8:30 Eastern, jobless claims, as well as new home sales at 10 a.m. Eastern. And let's go here. The Australian New Zealand dollar is crippled by rate cut bets, weak risk appetite. The Australian dollar was on track for a fifth straight session of losses on Thursday, while its New Zealand counterpart held near a one-month low amid growing expectations of further monetary policy easing in both countries. A stronger U.S. dollar, a wave of warnings about the U.S. economic outlook, and deteriorating risk sentiment also weighed on the Antipodean currencies, analysts said. The Aussie dollar was felt 1/3 percentage point to 70.48, a level not seen in 2 months. Momentum suggests the next stop will be the 100-day moving average at 70 cents even. If losses hold, it will be the currency's worst week since a 6% fall in mid-March, when fears of coronavirus and global recession wreaked havoc in financial markets. The Australian dollar's trajectory began on Tuesday when the RBA Governor Guy Debelle signaled the prospects for further easing. That prompted some economists, including those at Westpac and Goldman Sachs and HSBC, to revise their rate cut, previously predicting no change of policy at the October 6th meeting. They now expect a 15 basis point cut and the 3-year bond yield target to move to 25 basis points now. While bonds rallied on the news, activity was muted on Thursday. Yields on 3-year paper were last at 0.18%, rising from the all-time low of 0.157. New Zealand dollar was last at 65.32. And on Wednesday, central bank hinted at further monetary easing while warning the economy may need support for a long time. And then lastly, onto the dollar. In demand as equities retreat on virus concerns, the dollar held on to gains against most currencies on Thursday as signs of an economic slowdown in Europe and the U.S. revived concerns about the fallout from a second wave. The dollar is likely to continue to rise as another spike in coronavirus cases in Europe Boost safe haven appeal. The risk is being sold across the board, and there's a big unwinding of dollar shorts, said Yukio Ishizuki. The dollar traded at 16.56 euro, and the greenback held near a weekly high of Swiss francs of 92.36. The pound at 27.05, the weakest level against the U.S. currency since July. And the IFO survey is forecast to show an improvement in the business morale in Germany, and that's pretty much steady. And appetite for the riskier assets such as equities is also soured after down on Wednesday showed U.S. borrowing activity or business activity slowed in September, and several Fed policymakers showed that further government aid is needed to bolster the economy. China's foreign exchange regulator granted fresh quotas under its outbound investment scheme for the first time since April 2019. So with that, we'll just go and move into the analysis. Bear with me. Okay, let's move into the euro. Irina asks if do you expect breaks below 3,100? We can go and take a look at that. I try not to just go and say, oh, this is going to happen and that's going to happen. I try and let the market do the talking. We've already had a pretty good fall. The only thing I will say about the S&Ps is we are in a pretty good little risk here because we're below the June low VWAP. So one of the things that happened the other day is we got below the June low VWAP. Come back in here. And we defended it and we rallied. We saw a nice rally. And then we turned around and gave it all back yesterday, and we were below the June low VWAP. So if we don't recover, it really opens the door for us to push lower, and potentially we can go down there. But I never try and say, oh, this is going to happen or that's going to happen. I pretty much let the market do the talking, because that way I don't come in with a preconceived notion. Now, I will say, like I said, this took me out of sorts. We did really well. And we had, as we closed on, if you remember on Tuesday, we closed near these highs, taking out what I would say some medium-term shorts, and we pushed higher in Asia. And then all of a sudden, it's like out of nowhere, we didn't come to a significant level. Like let's say if we'd come up and say, oh yeah, we came right to this level, we were failing. We just came down in here, and then it's just like the market just started to roll lower, and it just kept on sliding lower, and for different reasons yesterday. And we may end up just kind of sticking around here. We might even bounce a little bit. And if we just sit here, then the door will open for us to move lower. But I don't try to come up with a preconceived notion that, oh, it's going to do this now. I'll let the market do the talking. You can see here in the NASDAQ, we did kind of run out of gas close to this slower exponential moving average right here. You can see that here, and we've come off a little bit. But we may see the market kind of sit around here today. I don't know for sure. Cash equities have already come off quite a bit. So we may kind of stabilize, and then if the market can't do anything, then that's going to open the door for us to even test lower. But we're just not really doing a whole lot with anything today. Let's go on and move into the analysis. Gotta open up my bias chart. Bear with me. Yeah, I kind of like, as I was mentioning about the S&Ps or Arena's questions, I'd much rather let the market do the talking. Um, Potentially, we could have seen the market sell off further in Asia, and we didn't really see that. We kind of held at these areas. We sold up just a little bit more. We're kind of pulling back again, but it's not like we saw, wow, we saw even more selling. I know some people were saying, watch out for Asia, which was a good reason. And we didn't see that. That's what I'm saying. So we may kind of consolidate today. I'm not saying perfectly, but I'm just saying is we've already got whacked pretty good on equities. So we may end up consolidating and kind of hang around here, and then we just may make another move lower. But like I said, once again, like I said, I'll kind of let the market do the talking. Getting back to FX. The euro press further weakening among weakening PMIs. We had that yesterday. Remember, we had the PMIs come out of Europe. Support on Thursday will be 1625 with resistance at 1718. And you can see here, we're kind of holding near these lows. You see here, and you see we haven't pushed much lower. And I was almost going to say, well, I'll just keep the support right around that 1652. But I thought, well, no, I'll give it some room in case the dollar tries to add on a little bit further. But we're kind of stretched here with the dollar, I think. I thought we closed above that 94.33, but we didn't. We closed right there. So we still haven't taken it out. So I was going to open the resistance a lot higher. But I think we're pretty oversold at this point. So we may see a little bit of the market holding today, but we'll still give it that 1625. And on the upside, 1718. Let's go to the cable. So the cable remains weak and support will stay at 26.52. Once again, you can see it's actually even holding above yesterday's lows right now, albeit in a very tight range. That's what I'm saying. I think we're overdone here. And my take yesterday was, well, actually, we did close above 94.33. Actually, we closed at 94.33. So my take was, if we close above 94.33, that allows us to go another leg up. But we didn't close above 33. We closed right at it. But you can see here, and I'm talking about the cash dollar index, you can see here in the cable, it's actually holding above yesterday's low. So I put in here, it will stay at 26.52 for support, which is actually holding. It's pretty well oversold too, with resistance at 27.80. So there's no changes there. Let's go into the Aussie dollar. The Aussie was dragged down with risk. Support on Thursday will be 70.19 with resistance at 70.95. Same thing you can see right here down 19. And we've actually been as low as 70.25, so it's not too far off of that. And let's go into the Kiwi. Kiwi came off as concerns with the RBNZ's future action came into play. Support on Thursday will be 65.14 with resistance at 66.14. And you can see we've already made a down here at 65.23, so probably just pretty close to it. So 65.14. And resistance will be 66.14. And I think we can now update this to bearish. Although overall still not in bad shape, but same thing here with bearish. And let's go to the dollar CAD. The dollar CAD continues its rally on the back of falling commodity prices, i.e. gold. Resistance will be 34.24 with support at 33.34. So we're not too far away from it. And on to the dollar peso. This thing is just crazy. It is just absolutely bludgeoned and run over everybody. Anybody that stood in the way, they've just been slaughtered. The peso continues its relentless tear. Resistance will be 22.58, which it looks like we may have got there. Well, not too far from it. With support at 22.20. It's just chewing things up on the way up. And the high has been 22.53. On to the dollar yen. The dollar yen has challenged the 548 level on Wednesday. Resistance on Thursday will be 559. You can see here we've continued to run out of gas with this 548 with support at 513. And lastly, we'll go to the cash dollar index, which, as I said, I thought it closed above 94.33. It did not. So I'll tamper this in because I was giving it room to go all the way up to 94.90 or something like that. Hang on, let me take a look here. The dollar index closed above 94.33, did not close right on the bell. Open the door for another further move. Resistance will be 93.91, which I guess meant 94.91, but it's not going to be that. Although it's above it, we'll go right there. It's going to be 94.62. And support and 94.07. And on to the cross rates. We had 69.08, and you can see we've pressed further, but you can see this level they're going for, 68.59. So that's going to be today's bias chart support, 68.59. With resistance, going to be right to the underbelly, right there. Basically, that's a little bit too low. Let's just go the high right there, and that's going to be 69.25. And let's go to the euro yen. Well, you can see here we're just marking time. I mean, yesterday and today's is almost identical. So this will remain the same on the euro yen, 22.23 and 23.79. And on to the euro odd. And we've made right up here to the 65.81, which would be resistance. That's a big key level too. Key weekly level here, that 65.81. And support, it's going to be right there, right coming across here, which would be 64.84. And on to the euro kiwi. Same thing here. Look at this, making a run up here to this weekly level of 78.80, which would be resistance. And support right there, coming across, which is going to be 77.97. And on to the Aussie yen. We've almost come down. Boy, this has really been one heck of a move lower, and doesn't mean we can't push a little bit further, but at least you know what the risk level is going to be, 73.81. And resistance, right this underbelly right there, which would be 74.64 for right now, which is just above the day's highs. And on to the guppy. Kind of holding here near these the lower end. On the upside, if we can see a little bit better rebound, it's going to come in right across the top there, which would be 34.88. And support right there in the middle, just right there, coming across. So it's going to be 33.36. And lastly, with the sterling odd. Pretty good rebound here, but you can see the underbelly here. See right there? That would be resistance, which would be 81.10. And support right here, which is going to be, that's still a little bit too low. It's had a pretty good little run. So it's going to be right there with all these touches coming across. That would be 78.90. Okay, and that'll do it here for FX, and we'll get the bias chart posted. Indices are trading relatively quiet right now, other than this minor pullback we got. So we'll see as things kind of get more excited as we get into the States. And we'll get the bias chart posted. And thanks for joining us here in the European Crossover webinar.